mindset. I mean, and just took a while of like being around those people and kind of seeing how they structured their deals, um, and really taking a look at myself, like, hey, can I do this? And like getting partnered with the right people and getting the right deals and all that, and not being scared to take those losses, because you're going to get hits along the way.
Hello, welcome to today's episode of the Nightfire Podcast. Today we have a special guest, Mr. Larry Pendleton, the Investor CPA. If you have not heard of him, go look him up. He does a lot of episodes about taxes. Where are you from? What part of the country are you from? Or living? Where are you speaking from?
I'm in
Yeah,
Norfolk, Virginia, so Southeast Virginia for those familiar with the state.
Norfolk, Norfolk. My brother lives in Dumfries.
Okay, yeah, that's probably about a four hour drive west from me. So yeah, a
So,
lot of investors going out of Dumfries doing more so of the lease options out there now.
mm, mm, okay. Can you give some people a 30-second elevator pitch? How long you been doing the CPA, all that jazz, and then we'll jump right into it.
No, I appreciate it. Yeah, been CPA for over 2 decades now. My niche has been real estate. So under the Investor CPA umbrella, we have our tax business with PC Financials, and we have our real estate business with CP Realty. I've been doing investing in real estate for over a decade now myself. Just kind of took a while to kind of get comfortable with it. So we've done the flips. Rentals, syndications, funds, and now focusing more so on mortgage notes and new construction, single family.
Nice. I'm excited about this conversation because we're gonna do it. I have like two different subjects I want to cover, and then we're gonna jump into some fun. So, first thing I want to talk about, just for clarity's sake, so I do a lot of seller financing and um, just negotiating seller financing with sellers.
Mm.
I want to knock this out first because I'm gonna cut this into a separate clip, and we're gonna share it with sellers.
Nice.
So, for if a seller, what are the benefits? Cut. What are the benefits? What are the benefits sellers get by getting seller financing on a note? Like, why is it important to them? What type of tax benefits do they get? Why is it important as me as an investor? Why is it important to negotiate for seller financing?
So in the aspect of if you're selling the property or selling the paper, which the tax aspect of is that you're trying to really defer the taxes over an extended period of time. So instead of selling the asset and being taxed all in 1 year, you get to defer that over multiple years. So without getting too much in the weeds, it's almost like a gross percentage of the principal, the interest that would be in the taxable in certain years. So it's just that's the main benefit is, okay, I'm just going to spread out the capital gains over an extended period of time instead of taking it all in 1 year.
So it helps out a lot. Helps out a lot for taxes and capital gains, and most people, uh, their silent partner is always going to take their cut, Mr. Uncle Sam.
Exactly. They'll find a way to get theirs.
They'll find a way to get theirs, and it's inevitable, and death and taxes that can't be avoided.
Nope. All we can do is just leverage other ways. I tell people it's almost like you're in this constant cycle now. You leave one rat race and then you're really in another one now where you're looking for the next asset to hold that may generate some losses year one to help offset what you sold so that you don't have to keep worrying about holding a property forever that you don't want to hold.
It's a weird conundrum that cycle creates, because I was talking to an investor, and his CPA told him he needed to buy something for depreciation.
Hmm.
The thing he bought was worthless. So now he has a loss for real.
Yeah, I mean that's the key piece of it, especially how like I do my strategies. Like we try to take everything into account and really merging the investment and the tax world, and that's why the investor CPA is on purpose. Is because investor first and then CPA, because if it's not a good investment, The tax piece is just a 1 year thing. You'll see that benefit come and go if you just got something and it's a headache for you over an extended period of time.
Very, very important. You got to
Yeah.
put your investor first.
Yeah, put the investor hat first and then worry about the it was where the tax benefits at.
Very, very valid. I see a lot of people make that mistake all the time. So I'm glad we're mentioning it now.
Yep, get it out the way. Don't let the tax tail wag the dog.
Um, a lot of people and I've talked to a lot of investors and I'm thinking one specifically, he's like uh some people want to hear certain things from certain CPAs, and you know what I'm talking about of different uh le not necessarily legal advice, but tax advice from
Hmm.
certain things. What do you say to those people that want to hear certain things in their favor um for dealing with Uncle Sam?
It's really more so how they're asking the question, and it's not so much of like what can I do, but like how can I get this write off, or like, or how do I help save on taxes, or how my entity structure may help with tax savings. So like really that term how really triggers that the the thought process that their advisor should be going through. Okay, how can we get this done? And then how to really structure in a way where the person has to then change themselves as well as how they invest and the time they spend in order to do so. Like for example, like people who have full-time W jobs but have long-term rentals, they may not be able to claim bonus depreciation. But the question how was like, well, you really have to change your investment at that point. It may not be directly like if change how you renting out that property, because you're not just going to up and leave your job. If you can, you would have done so, would have done so already. So that's really, if you're trying to like get to a particular answer that you want to hear, is okay how, and then that thought process of how do we merge where that person is at to where they want to get to, and go from there.
The one I hear a lot is the entity structuring. Everybody gets stuck in the weeds about entity structuring and like, do I need to do S corp or C corp? And you can correct me if I'm wrong, but I always tell people it's like you don't need to be S corp if you're not making money.
Yeah, I was just talking to had lunch with a client the other day. We're talking about some investments, and young kid. I'm 40. I think he may have, he's 25. He may be. He was telling me about his LLC, and he just kind of threw out there. I was like, man, should I be an S corp? And I'm a very blunt individual. I was like, are you making any money? He was like, "Oh, I'm making a little bit of money." I was like, "No." Like I tell him, unless you're netting $50,000 a year, S corp doesn't really make sense for most businesses at that point. So it's like, hey, what type of business are you running determines that, and then how much money then you're actually making. Because especially aspect of the LLC by itself doesn't help you save on taxes, and this whole aspect of doing an S corp only helps with FICA taxes. So unless you're making money to pay yourself a salary, you're not going to really help yourself at all.
You heard it here first. Heard it here first. I talk to a lot of people, so I know this. And like I said, we got to clear some things up here. This is part of the conversation.
Yeah, yeah, just get to the straight to the point. Like, yeah, everyone kind of, there was a point in time everybody was overselling LLCs and overselling the tax benefits, and people weren't seeing it. And now people are now the wolves are out there overselling S corps now and rushing people into that. Now they got all these additional compliance costs annually that they got to do.
Mm, there you go. So you said 20 years in the business, 10 years as an investor. What was what was the kind of getting over that hump to get actually become an investor in the real estate space? No, after being in the business for 10 years, like you knew a lot at that point and you should have talked to a lot of people at that point doing different things. Like,
Yeah, it's limiting mindset. I mean, you and just took a while of like being around those people and kind of seeing how they structured their deals, um, and really, okay, taking a look at myself, like, hey, can I do this? And like getting partnered with the right people and getting the right deals and all that, and not being scared to take those losses, because you're going to get hits along the way. You just try to minimize them as much as possible. So, So yeah, like I said, I've been fortunate to be connected with some right people who's like, hey, you've been doing this, like, take a look at this, like, sign off, and like we'll split the profits, whatever, and go from there.
Um, what are some tax strategies that are often overlooked that people like forget about or just don't think about it in general that everybody can participate in if they're a property owner?
Yeah, I think the aspect of properly getting their kids involved with the business, like especially early, when you're able to kind of pay them up to a certain amount and not have to withhold taxes from their pay, and the kids don't have to file taxes if they're under a certain dollar threshold, depending on which state that you're in. So that okay, you're basically able to kind of pay them without having to worry about them paying taxes. So you're shifting your money to a lower, a lower tax bracket at that point. I think really I think people know about IRAs and all that, but like really solo 401ks is another thing people overlook, especially those who are flipping, um, doing property management work, stuff like that. Is kind of key in that space. Like when the aspect of like doing the rental properties, like I think people are very familiar with depreciation itself, but I think people only focus on the bonus piece of depreciation is more so just accelerate depreciation as a whole, where you can still see value with cost segregation studies without having to worry about do the bonus. So it's just okay. Once again, is the cost outweighed by the tax savings that it will create at that point. So it's just kind of like really digging into the weeds of like, hey, what makes the most sense and leveraging those opportunities there that people overlook because they see the bonus appreciation starting to dwindle down and they start to look away from it. Like, no, there's still some benefit there. Let's not let's not completely do a 180 and not consider it at all.
Yeah. On the kid stuff, I think a lot of people forget about that one. Do they have to have their own bank accounts, or can it be like I'm gonna put it
Yeah.
from my left pocket to my right pocket?
Yes, having the kids have their own bank account is definitely needed. And it just helps with like I'm not saying it's going to mitigate your audit risk. It's just if the audit comes, the paper trail is there. So it's I thought it was electronic payments, like don't do cash, like just do a simple quick transfer from one account to another, and now you're all covered. Like if the IRS starts to send you a letter about certain deductions that you got going on.
A lot of people are scared of like audit risk. Uh,
Hmm.
is there like what's what the percentage is of people getting audited? And is the people being audited are they doing stupid things to get audited? Like is
Yeah,
that like a is there like
yeah,
a ratio here?
yeah. The percentages of like people getting audited are still rather low because it always starts with just a letter like, hey, can you verify X, Y, and Z? What ends up happening and why people get letters is they forgot a 1099, like they're supposed to report that income or they reported it somewhere else so it's buried, but they have to really kind of specify like, okay, how does all factor in, but it was already in there per se. um or they're reporting expenses in places that don't make sense. Like I run a tax business. Like why would I have expenses in repairs and maintenance? So you really have to kind of like look at like, are the expenses that you're reporting make sense to the type of business that you're running? And if not, all right, that does kind of trigger certain trigger yellow flags, red flags for them to at least send the letter of like, this doesn't make sense. Like, why is your tax business reporting repairs and maintenance? Like, what's going on? Especially if you got a virtual office and stuff like that. So, yeah, like, so you just gotta be mindful, like, where are you kind of reporting stuff, or you just so much significant losses year after year after year after year, and it's not based on depreciation or Section 179. Is okay. Like, are you really running are you really trying to run a profitable business, or is it just a tax shelter? And then, like I said, they'll try to catch you there.
Probably catch it.
Exactly.
People do the darndest things out there. Uh, this is not what is this is not legal advice.
Yeah, not legal advice. Really not even tax advice. It's like basically everything's like verify with your advisor, who however do that people do their research, but tries to be as informative as much as possible, even on podcasts.
Absolutely. No, that's one of the main things is getting the information out there, even if it's general, because a lot of people don't know what they're doing at all in a lot of different ways, and
Mhm.
they could be experienced for 5 to 10 years and still not know what they're doing.
Yeah, I mean, there's some good things about Google University and YouTube and Chat GPT, but it's still all general in nature. Like your particular circumstance, like is going to
Changes
vary to
everything.
whatever you got in your source from. So you have to ensure that where you're at kind of applies to whatever type of strategy that you're looking to do. Any aspect of all CPAs or tax advisors or accountants, like we're all not made the same. Like I teach CPAs about what I do and educating people on like real estate and tax savings. Just because you have 3 letters behind your name, that doesn't mean that person knows the whole tax code. Like nobody can. Like I don't do nonprofits. Like I don't do payroll. Like there's stuff that like there's other experts at that, and I defer to them. But we all kind of stay in their lane so that we help support one another.
That's a big point too. I like to hit on too is that everybody the the CPA industry is not a one all catch all. There's sub niches and expertise in between everything. And if you're doing nonprofits, don't talk to an investor CPA.
Right. Yeah. And I send people to certain referrals. I look at it this way, and like if you need brain surgery, you're not going to go to your dentist. Like the surgeon and your dentist are both doctors. They're both smart, and they probably graduated top of their class, but they took different paths of where they wanted to specialize in their in the field of being a doctor. The term doctor is rather broad. You can be any type of doctor and not be able to help anybody physically. Maybe a psychology doctor, but like all that stuff is needed. Same thing with CPAs. Is like there's certain niches you can drill into, or you just be the general CPA and just be like like I'm one of you can't even be a jack of all trades because there's so many different areas you can go into.
Yeah. Um, I want to jump into this topic. I'm excited about this, but let's talk about notes for a second.
Mhm.
Now, you said you did flips, rentals, and all this stuff, and you ended up at notes
Yep,
last.
yep. And once again, you just getting around certain people and certain clients, and it was like getting invited to different conferences. So about 3 years ago, I was invited to the DME Diversity Mortgage Expo, uh,
Mhm.
and like I said, it was one of our private lenders for our new construction projects. And I knew she like kind of did some land investing, and then she's like, you should check out this note. You probably could pick up some clients. And I just went there just to learn. I really wasn't there to pick up clients. And then come to find out, like, man, you can actually buy someone's mortgage and then truly be the bank and cash flow off of that without having to worry about dealing with tenants and toilets and termites. And like, hey, I'm sold.
Now, the notes you're doing, are you doing land notes? You're doing house notes? Are you doing commercial notes?
Most of the ones I've done or the ones I've done so far have been land and single family uh, mortgage notes.
Okay. So, I'm a big fan of notes. I love notes. I mess with notes all the time. I was doing stuff with notes this morning. Um, notes is fun. Okay, so for people that don't know about notes, it's really cool you said land because I do land notes as well, mostly.
Mhm.
Mostly what I deal with. But housing, Fannie, Freddie, can we talk about that a little bit? And
Yeah,
what for people that don't know?
yeah. Like I say, yeah. I mean, what aspect of it, just in
Just
general?
like the general rules and commercial and uh consumer loans.
Yeah, so technically, and for those like yeah, like you typically go to your larger banks, get a mortgage for your loan. The banks have probably already sold your loan before you even closed on it. And it typically is just kind of sold in packages to large hedge funds and other banks. When '08 happened, a new market had to be created to sell some of these notes off, and where you call it the secondary market, but that's basically almost anyone at that point. Now you can't just walk into a Bank of America and ask for a tape or a list of notes.
Not
Uh,
yet. Not yet.
we'll know where everything's going, so you may be right. But typically you're going through just different communities, different brokers. Um, Everyone would still typically still prefers them to sell them as packages of other notes, some good, some bad. But but you can get them kind of cherry pick off of the list, or what they call a tape of notes of there. And you're basing it off the unpaid principal balance. You may take the interest rate, what the yield you can receive, how many payment periods are left on the note, what type of discount that the seller is willing to provide at that point. Is the note performing, as in the person's continue making payments, or is it non-performing? You haven't made payments in probably three plus months from there, and just kind of know what strategies work for you at this time. Like I said, all the ones I've done have been performing. I'm actually looking to kind of get into non-performing. Actually want to work with somebody with experience in that space, because like I say, you put your money in, but nothing's cash flowing, but you're working with this person to get them back to reperforming there. So, but the aspect of money in, and then just kind of seeing the payments come slowly in, but it's boring, but it's a good return if you buy right on the front end.
Yeah, it's bang right in the front end. The notes thing, it's a lot of people don't know about it, and they don't know how to either find it or create it in general. Most people don't even know it exists.
Hmm.
It doesn't even exist. But I equate it to that the banks manage trillions at scale.
Yep, trillions, easily,
Trillions.
easily trillions.
Trillions at scale. So I think little investors can handle a few 100,000, you know.
Yeah, that's the best thing about it. You're trying to take your piece of whatever your financial freedom numbers require enough to get that cash flow coming in. And I mean, I prefer not to self manage. I always use
Ever, sir.
loan servicing company, because like I said, just there's one thing I just don't want to do is just kind of service that. I want to focus on other things from there. So same thing with
It's
my.
the hardest part of the business, and it's so easy to just outsource it.
Yeah, yeah. Especially like I said, $35, $50 a month per note. Like that's, and like if I'm still making whatever, if I'm still making the returns I'm projecting to make, even if I over project what the loan servicing fee is going to be, I feel like that's a win at that point. It's truly passive. Well, to pass to the most extent at that point.
And now, I don't know if you said this, but are you creating the notes or are you buying them?
I'm buying them. We've been looking into creating them. The markets that we're currently in, especially with the house that we're building, the rents don't make sense to seller finance to an investor to rent it out, and we're not set up for like Dodd-Frank regulations to sell it to the seller finance it to a homeowner. So we're kind of in this weird space of seeing rents are going to go up or actually connecting, because it's not, as you probably, there's not a lot of attorneys that actually are involved with Dodd-Frank regulations and all that. So, or the ones that do, they want stuff in larger scale. They're not really working with smaller investors.
The good thing about housing is it's just easier to find a mortgage broker, and there's a million loan products out there. So it's just finding a qualified borrower, and you can pay cash.
Guys, yeah. Yeah, good way to go. Good way to go. And then, like I say, yeah, then just sell the paper and move on from there.
Um, no, it's a very interesting space. Now, is this like your new endeavor, the note side, or you're just kind of ticking your toe in right now currently?
Like I said, we've done. I said I took a year just to educate myself on it and just network with the right people and get into some different communities. Done about 11 so far. Some of those have paid out, or the person paid off early, so it's kind of more on the back end of the note. Or one person they sold the property, didn't get as much as they wanted, so they end up like paying us like $5,000 or $6,000 less than what the UPB was, but it was still overall, I mean, good came out to be a 14% return in 8 months. So like, okay, that can't really beat that too often. So, but yeah, so now we're trying like how to really scale up from here, bring in more people, get into different communities, see what other tapes are out there, and see if we can make the yield and returns that we're looking for.
A lot of people in the note space are usually working with self-directed IRAs,
Hmm.
like private investors. Is that what
Hmm.
you're doing, or is it all privately sourced or internal cash?
Well, for ours, it's all because we're actually like building cash flow off of it. So it's just our own cash. If we do work with others, we do have clients and other investors we know who got self-directed IRAs and that they want to kind of put the work and grow from there.
Um, so it's all internal right now. Yeah, I'm trying to raise money for from self-directed IRAs to buy notes because I get sent a lot of stuff.
Good place to be in. I mean, especially those who kind of fearing what happened with the market. So something to give them a alternative to feel comfortable with.
Yeah, absolutely. Um, what is your? You said you're trying to get non-performing notes as well.
Yeah, yeah. Let's say still kind of try and connect with the right people on kind of seeing that process all the way through. But yeah, so non-performing would be something interesting to get into as well.
Seconds, or you're avoiding that completely like the plague?
Depends on the like I said, depends on the equity in the deal. So like if there's no equity, then like I said, I don't overly fear seconds from that standpoint.
Okay, I gotcha. Um, on the notes you're acquiring, how are you searching for those, or what's the process for that for internally for you?
Really, in terms, just more just relationships. So there's a guy in Florida who makes his own notes. I end up buying from him. There's a lady out in San Diego. She buys them in packages from hedge funds and family offices, and I just cherry pick off of her list there. So yeah, so it really I just kind of connect to different groups, or different hedge funds to see where I can just cherry pick from.
Yeah, it's the note thing is very relationship based.
Yeah, yeah, because like it's such a small community, and like they don't want to have known that they thought they was gonna get it sold to someone, that person didn't come through and buy it. So like so you end up hurting their name because they had someone they were trying to buy it from, or so you just gotta be cautious how the relationships with those kind of go and execute when you can.
Yeah, 100%, 100%. Um, what is I don't know, what's the future look like for you? You doing more flips, or you just gonna go 100% in the notes, or what do you, after doing a lot of different things, what's your personal?
Yeah, right now is like I said, we're gonna keep growing the notes as they come along. We're still acquiring a lot of land to build on, and more so working with cities on how to bring attainable home ownership for their police officers and teachers and just other people that actually make the city run from there. So, a bit of a passion project of ours that we can still profit from and grow from there. So, yeah, more new construction and more notes, and then like I said, as for the tax side, I mean, we're just constantly still right sizing the company. Like I say we'll hear out anyone to see if it's a good fit, but just scaling it in a way that makes sense as it now becomes a huge focus for me there.
You just mentioned something about doing stuff for the teachers and police officers. What are you doing there? Are you helping build new homes for them, or
Yep,
what's?
yep. So just get them in position to actually buy homes in the cities that they work in, so they're not having to commute 30 plus minutes from another city to where they work at. So and how to restructure the deals and stuff so it makes sense for everybody involved and getting the cities to uh, sacrifice certain parts of what they're looking for as well, and without having to be just low income housing being built.
Is this like a nonprofit or like some type of subsidization through the
That's a
through?
for profit. So yeah, make sure we're basically bringing our like we'll build the homes a certain way cities provide the land, and then we'll work with the lenders on, okay, how to make the mortgage, not make the mortgage like 30% or less of their monthly take-in.
Ah, it's really important because you said working where they living where they work is huge. Because
Yeah,
I used to work in Chicago. I used to live in Chicago, and that was people would commute hours
yeah,
to
yeah.
work.
It's terrible, especially like I say, price of everything going up, and the increase in pay isn't matching the inflation at all, and everything that's going up. So we can at least do that so that you're not putting that stress on, like I said, to the people who's actually making the city go and taking care of kids and making us all safe.
How is this? How is the city participating in this? Like you said, they're providing the land, so
Yeah,
that
so you got cities that own land, and I tell them it's you can subsidize the land, or you can like, as I tell council members, you you want to sell the land, you want to collect property taxes, and you want to tell people that you care about like affordable home ownership.
your
Those
constituents.
those three things don't match up. It's like good, fast, or cheap. You can pick two. You're not gonna have all three at
Yeah,
that. So it's like, okay, if you can still collect property taxes without impacting property values, look out for your constituents and actually get more of those who voted for you to actually live in your cities without having to just be a renter all their lives, and actually give them opportunity for home ownership. Then it's the aspect of like what makes sense in regards to subsidies of the land and how we can make that work from there, and just have it all kind of funnel through a program that people have to qualify for.
the are you putting some type of parameters on the buyer that way they can
Yeah.
get some type of really cheap property subsidized by the state, and you guys kind of form it up and they leave a year later and sell it for a huge profit.
Yeah, yeah. Like I say, it's like because we'll still sell the homes at market values. Like I say, that's when we kind of working with our relations with the banks on the type of mortgages and all that. Whereas like it's not some extremely long 50-year note mortgage, but like it's still 30 years, still market price. But okay, let's actually get the note down, and what can we do on our end to still build quality homes without going cheap, but we'll sacrifice our profits for the sake of the homeowner having a cheaper mortgage.
That is a conundrum of conundrums right there.
Yeah, like I say, it's just the aspect of running the numbers and making sense. And then once you actually see it and then present it to all the stakeholders, all right, the developers and the cities have to be the one to take a sacrifice. How can they take a sacrifice without turning into a nonprofit? Now is then focus on you making your true numbers. You're really making your numbers off of volume instead of just these one big hits because you bought this house or because you sold this house per se.
Yeah, Virginia's houses are expensive.
Yeah, like where we are, the average home price for a 3-2,
Probably 450.
like well 3-2 1,500 square foot to 2,000 square foot home can probably go for 325. Yeah, you get into like the 2,500 square foot homes, you can get into the 400s rather easily.
Yeah, Virginia's crazy. It's an interesting goal and dynamic. I've never heard of anybody doing that for for that, and even subsidizing from the state, because state owns a lot of stuff, but last a lot of time the state the state is like they're land bankers is what I see them like. They'll get stuff. I had a property come up in North Carolina, and the state owned it for like 30 years, and they just sat on it, and then they're like, "Oh, we don't need it. We're just gonna auction it off." And I'm like, "You've owned this thing for 30 years. Like you're part of the problem."
Yeah, they are. I mean, we got a house from the city one time, and somebody was living there, and the guy was paying rent all this time to the city.
To the
And
city.
and yeah, because the city owned the property, they foreclosed, they took over the property from the owner, but the guy just kept paying rent, and then I guess the city did like an auction, like a but an audit of their records, And they was like, hey, where was the money that he was paying going? Like they had no clue. He was just mailing, like he said, I mailed it to this address that I was told to mail my rent to. And he was there for like 20 years. He was like, no one had any issues. And he was like, I haven't been like financially strapped. So he's like, I just paid my rent and kept it moving. And he said, I wish I would have known nobody was taking record of this. I probably wouldn't have been paying anything.
Right? Yeah.
So
He found a legal loophole and
yeah, like I say, he just just be mindful of whoever your landlord is and make sure it's not the city. You just make sure they're keeping track of it because, like, man, I'm not sure. I know over 20, I'm not sure how much it really would have been, but that's significant. Um,
it was probably really
that's a
cheap
huge
too.
oversight there.
He wouldn't want to leave anyway. It was probably super cheap.
Yeah. I forgot what his. I mean, it's been a few years, but it's like I forgot what he was paying, but it wasn't much. And like I said, he was just kind of at that point where he was going to like end up moving. Anyway, it was just happening weird timing of us coming to buy it and him like looking to like potentially move and
Yeah,
like he said, they never re-signed the lease. He just thought it was evergreen and then just kept paying over over for 20 years.
that's wild. I've never heard of the city owning a rental. That's wild.
Yeah,
That's a
yeah.
first.
So it was like cool. Like, yeah, y'all need to do some investigating and we'll see that. I'm not sure whatever what came of that. I'm pretty sure they just kind of just chucked it to like whatever and just keeping quiet on it.
This has been a very interesting episode. I appreciate you coming on. Where can people find you online? And what's yeah? We'll start. We'll have one more question after that. Go ahead.
Yeah, I'm on Facebook, I'm on Instagram, I'm on LinkedIn, Larry Pendleton CPA. You can catch me on my landing page, theinvestorcpa.com. If they're watching, they can scan the QR code. That'll take them there as well. Yeah, so looking forward to connecting and seeing how I can be of value.
Last question. What is a quote that is yours or somebody else's that you resonate with?
I'm paraphrasing here, um, because it's from Dan Sullivan's book Who Not How,
Hmm.
and the premise of it is that if you can achieve your goals by yourself, your goals are too small. And since reading that, and okay, like bringing in the right people from the tax business, bringing in more people from the real estate side, like just seeing how everything has kind of grown in the right direction, knowing that I needed help, we needed help to do bigger things. And just trying to do everything ourselves wasn't it's not the right way to do it.
Team effort. Business is a team sport.
Exactly.
There you go. For everybody here, go like, share, subscribe. Go check out Larry on all the platforms. We'll see you on the next episode. Thanks, guys.